Let me go ahead and do that first. Okay, so here we are, guys. We are on session 8. Tomorrow will be the last day for Ignite. It's been quite the journey, I'll tell you guys that. I'm sure you guys have learned a lot, those that were here from the beginning, and it's one of those things, right, where like we invest our time and energy into these programs, and sometimes internally we're just like, it's another training, it's something else we have to do. But I want to just, re-energize your thoughts around that, and just give you guys the opportunity to know that this is something that you get to do. It's not something you have to do, not necessarily something you need to do, but you get to do it. And I'm telling you that because I get it. This could be some pretty mundane stuff, but at the end of the day, it's the opportunity to up your game. As much as I've been in this business, teaching Ignite still gives me things that I have not focused on yet, or I have not done at a high level. And it reminds me every single time that I get the opportunity to up my game, because let's face it, there's so many things in our businesses, and especially as newer agents or agents who are just getting in the business or even been around for a while. If you're still a solo agent, the reality is you're still wearing so many of the hats, you're still carrying so many of the pieces. And why we have programs like this is to really help you understand that there's a system that you can follow, and there's a process. And if you start working on that system and process, you can start to bring in help. You can start to put yourself in the right environments that will get you where you need to go a little quicker, to make things a little bit more efficient. And to be successful as an independent or individual agent as well, you got to consider that you're going to have to make it work with systems, because systems are your best leverage, especially if you don't have people leverage, right? So today's topic specifically is on agent financials. And it's no surprise that it's towards the end of the Ignite. It's one of the biggest ones. And it's to really give you guys the perspective of what it is to be financially sound in your business, right? So we're going to go ahead and get started on that. And, we're obviously here, we talk about lead generating for buyers and sellers. We're covering all the topics here. Make the seller listing presentations to get listings. We covered that. Make buyer presentations, get listings, and preview real estate. But now at the bottom there of running the business, we're talking about managing money, right? So the goal for our time together here today is to teach you habits to build a financially sound business. And we'll be employing certain techniques and models used that the most successful real estate agents use in terms of managing how they handle each commission check, and how to use that money to build a bright future for yourselves in real estate, and essentially build a bright life through it too, right? So let's go ahead and dive into that. And in terms of the timeline for today, we are looking at, we're going to be covering the perspective of what that is. And then we'll go through some MREA models to help you kind of get a visual of, what models to use to keep your business in check. And then the flow of money and how to build your future through that, and best practices. And then we'll be wrapping up the day, okay? So I want you guys to think back to the classes. It's funny because Adam here with us today is getting his license right now. And do you ever remember learning how to handle your finances while you're getting or studying for a real estate license? You guys ever talk about how to handle your money when you're getting your license? Probably not, right? For the most part, the answer is probably a flat no. But today we will dive into the practices of how to put that in place and ensure that, again, you're funding that big life, okay? So with that said, Keller Williams is known for models, systems, and technology. So naturally, Keller Williams offers powerful tools driven by technology to help you pursue your personal and business goals. Use proven models and tools of the Millionaire Real Estate Agent book, right? The MREA. If you haven't gotten it yet, grab it to have a smart, sound business. Now, we're going to go through some of these habits, right? And we're going to talk a little bit about why do you think that these habits are important. So who wants to participate here with me today and maybe read that first habit up there?
Set a profit goal that funds your, wait, your picture is right there. I can't see it because I'm on my phone.
Oh, set a profit goal that funds your big life and pursue the activities to achieve it.
Okay.
So with that said, why is that important?
Because you definitely want to achieve the goals that you set, and you have to put the funds away in order to pursue and achieve the goals.
Right. I think a lot of it has to do with agents confuse income with profit.
Yeah.
I'm going to repeat that. Agents confuse income with profit, and they're two separate things. Can we all agree on that?
I agree with it because, like, now that I'm in Keller Williams and, looking at my past, because I've been in real estate for a minute, I just want to do some new things with my business to build. And right here, just listening to this lesson here is going to help me to rearrange it.
Absolutely. Absolutely. All right, let's go on to the next one. Number 2, estimate, save for, and pay your taxes on time. Why is that important? Why is that an important habit?
The taxes must be paid because you'll fall behind. And that's where I'm at right now. I'm behind, but I'm paying, but I'm behind, but I need to catch up. So that way I can be able to get these taxes paid on time. And so I got to, be able to save the money and be able to pay it.
Yep.
See, I'm getting there, but I just want to do something different, and this is going to teach me.
Sure. Absolutely, Kay. Thanks for sharing. So many agents don't save for taxes and don't pay taxes on time. Many agents.
Correct.
And a lot of them aren't trained to, or they haven't been taught to. So, and we are a 1099 business here, right? We are all pre-tax. Unless you have a business, you pay your business pays you salary. Most agents have a hard time, or they're not keeping in mind to set money aside for taxes. Awesome. So 3, yep.
Just out of curiosity, is there a rule of thumb on how much of a percentage you should set aside?
Yeah, you want to find that out through your CPA first and foremost. That's the person you talk to for that. But we will cover a little bit about what you can do to make sure you're at least covering, having an adequate amount to cover.
Okay. Tracking. Thank you.
Yep. All right, cool. So use the proven models and systems of the MREA chart of accounts. Why is that an important habit?
Having that habit, it'll help you to conduct your business in a correct form, in a correct manner.
That's right. And many agents don't use the powerful tools available to them. When you can use a proven system and model, right, and have a chart of accounts from thousands of agents who've done this and are able to efficiently operate within certain parameters and lines, they've already done a lot of the heavy lifting for you. You just gotta, kind of like take your checks, you apply, right, and then run with it and just start to see what happens. Start to see how you start to function in your business. Start to see how you'll start like going for those extra couple deals a year because it's starting to make sense to operate in that manner, right? It's a big deal. Awesome.
I start off trying to do the system, but I never really completed the system like I supposed to. So that's why I'm like really trying to give this a fresh start to start it out right and just be consistent with the system.
Sure. It's a big deal. That's why we're calling these habits, right? Good habits to get into are important habits to build. Awesome. And then the next one is 4, be fiscally savvy by reviewing your financials monthly. Why is that important? Who can share?
So you said the review like on a monthly basis to just figure out, what you have spent, what you have saved, what, it kind of like keep you in control of how you're using your finance.
Yep. So AJ, yeah, that's definitely one of them, Kay. But AJ, how important is it for you to track hitting your 40 contacts a day?
Sorry, I was getting a call like right when I went to hit unmute. It's super important because then I know just like where I'm at and if I need to like stay a little longer, if maybe like not take as long as of a lunch. And it also helps me just like strategize when am I getting like more pickups or more dials, not more dials, just more like answers.
What else? How many contacts does that equate to a week? 40 contacts a day.
200.
And how many does that equate to a month?
If it's 3-week month, then 600. 4-week, 800.
Yep. So why I'm asking is because obviously you're able to track where you're at, where you need to be, and you're living in that, right? And when you do that, what gets to happen, right? You get to see where you are. And when you're actually visualizing and you're looking at it constantly, you're able to realize where you are, and you start to notice the nuances and what's going to make the difference, right? In your business. Like you said, when you're doing your contacts, you start to realize, hey, if I start to call, from 9 to 11, things are good. When I get closer to lunch, things drop off. Maybe I should take my lunch during like those dead times or those dead hours. Financials is the same thing, right? Like the more you look at it, the more you have a relationship with it, the more you're going to start being able to create the habits to follow the systems, to follow the models, to grow your bank accounts, right? To grow your revenue, to grow your income. So being in tune with that is a big deal. But if you turn a blind eye to it, or you're looking at it once every couple of months, or even worse, you're afraid to look at it, so you don't look at all. Okay. Then you're not being purposeful with where you are in your finances. And that can put you in a really tough spot. Even people that make tons of money, even if you're making $1 million a month, you still might end up spending $1 million 100 and being $100 deficit. We see it all the time. If you're not tracking, you're not looking, doesn't matter how much money you make. You got to know where you're at with your financials. Cool. 5, pay yourself a salary. Okay. Just another thought on that last one. Many agents don't understand their financials. They just wing it. So in closing, that's something there. 5, pay yourself a salary. Don't plan for, most agents don't plan for a regular monthly income. So this is a big one, guys. So sometimes you'll get a check that's 20 grand. Sometimes you'll get a check that's 10 grand. Sometimes you'll get a check that's 15, maybe 5, whatever that check is, right? If you're paying yourself a salary and you knew you had to meet a certain number for that salary to stay consistent, you're not going to look at that check and be like, cool, I got 15 grand. I got to pay myself 5 grand a month. I'm good for the next 3 months. That's not the way it works, right? Whether you're making 15 grand or 100,000 in that month, your salary is your salary. That's what you pay yourself, right? And you got to stick to that, whether you're making more money, and it's tough to do when you're making less money, right? And I think a lot of the problem with salary is deal flow. Many of us here in California, we really focus a lot on our sales volume. Our numbers really spoil us. But if you actually remove that from your mindset and you focus on units closed, I think you're going to start to build a business that's going to shift for you in a way that you're creating enough deal flow to have enough consistent income, right, for you to run a sustainable business. You're not doing that. I made $40,000 this month, so I'm good for the next 4 or 5. Or I hit 60,000 in my first 2 months, and then all of a sudden your financial thermostat tells you, hey, you're making more than what most people do in 1 year, in 2 months, so let me just go and chill for a while. If you're paying yourself a salary and all you got was $5,000 out of that, trust me, it's going to regulate. And I'm not saying you can't put structures in place to take your vacations, put things in place, but you know, doing it that other way, you're not being purposeful, right? So you want to be purposeful. You want to be disciplined in the area that regardless of how much money you make, that you have a target salary that you're hitting, and then that's the goal, right? And don't get blinded or thrown off because you've had a couple good months. There's a time and place for that. Yeah, many agents don't, focus on a regular monthly salary. That's just what it is. 6, prepare now for a financially secure future. Most agents do not do that. They're not preparing for their financial security. They go back to that, wow, I did really good. I'm good for the rest of the year. That's all I need. I'm gonna hang out for a while. And then guess what? They just kick back. They stop following up on leads. They stop prospecting. And then it gets so much harder when that money starts to run out. And now you got to regenerate all these things again just to get back into a solid pipeline where you're getting a decent deal flow again. Right? So what are you guys hearing with all these things? These are, again, about habits.
Consistency is key.
Correct. Chet, what are you getting out of it?
Pretty much the same thing. You have to, as much as we prospect and focus on things on the business, we also have to remember to focus on the economics and make sure that we are intact, because it will eventually end up impacting the business if we're not.
Sure. So these are just to give you guys some key examples, right, of some habits to really consider. And maybe you could put these, write these down, or they're in your participant guide too, guys. So you can always have these and like post them on your wall. Like, how often are you visiting these 6 things, in your business? I think if you keep it somewhere and you can glance at it every so often, it'll be a good reminder. So, you do something with it. Now, we covered these things lightly. Obviously, we could go into each one of these things for days, to be honest with you. But we just kind of wanted to go through each one and just like cover some of the fundamentals so that you get off on the right foot with your business, okay? So let's go on to the next slide here. So money is good for the good it can do. Gary Keller, right? So what's the purpose of business? I want to ask you guys that. What's the purpose of business?
It might be a dumb answer, but to make money.
Make money. Yep. Why do you got to make money?
To survive, to do the things that you want to have.
Okay, and what do you got to have with money to do the things you want to have?
You got to know how to conduct your business in order to make the money. You got to know how to keep the money to flow into your business. So
And when you got the money flowing into your business, what's the goal then?
have some goals of what you want to do with the money.
Okay, let's keep that going. For you to have goals, what is it going to take for you to have, what do you need for you to actually like pay for those goals, to reach those goals, to go to those, to create that life, to build, that life by design? What do you need to do that?
So you have to strategize how you're going to be able to put a schedule in place in order to do it on a daily basis. To be able to make the money, you got to have some kind of way of like certain things that you're going to do in order to generate the leads, follow up with the leads, and then convert them into a open escrow and a closed escrow to
Yep.
make the.
Yep. All those things are very valid, but what the purpose of businesses is to make a profit.
Okay.
It's funny because it's one of those last words that we'll probably like think of on all the lists of everything we could like name off initially, right?
Correct.
So if we're not thinking about being a profit-based business, then it's not in our sight. If it's not in our sight, then we're not going for it. Right? So, and with profit, you have the money to do good for your family and your community, right? When you set your goals and you become keenly aware of how many transactions you need to close on your financial goals, this is the money that you'll use to fund your big life, right? And to do good. So we're going to be talking about a financially sound business and the practices that you can incorporate in your business to start with every transaction you close. All right. And to begin with, understanding how the money you make from each transaction can contribute to your financially sound and financially unsound business. So now that, we kind of talked about profit a little bit here, you could start to see where if we came from being more profit oriented, that it's bigger than the business, right? The purpose of business is profit, but beyond that, it's to fund the perfect life. That's my, like, at least analogy for it, right? Or my opinion on that. So we're going to go over some things here, and we're going to review some of the scenarios here on page 4 of your participant guide. I'm not sure if you guys have that in front of you or not, but you can go along with me if you don't. So in the scenario represents a transaction closed by a solo agent, Jessica Campbell, right? Where she closes on a home, and her share of the commission is $9,000, right? Now, is the $9,000 commission check that Mary receives a profit, or is it income or revenue? Which one do you guys think it is? Mary receives a check. She closed on a commission deal. Is it profit or is it income?
Income.
That's right. It's income. So the profit is what's left over after you fund your business, your taxes, and your personal lifestyle. Personally, I don't look at profit after my personal lifestyle. I look at profit primarily after my expenditures on that transaction. But nonetheless, that's a big aha there. If you add your personal lifestyle to it, just think about what that looks like, right? Maybe there's certain things that you want to that you have on a monthly basis to maintain a certain lifestyle, so you have to make a certain level of income each month too, right? So now we're funding that and we're incorporating that into our business. So it's that one more step to give you a bigger why you can generate more money, right? Now, it's important to know the difference between income and profit, right? So what do you use profit for?
Would the profit be where you taking it, putting it into a retirement, setting up, like if you done paid everything as far as your business, and then this is what's left, and then you want to take it and put it into something that's gonna benefit you in the
future, right?
yes.
Yeah, I agree. So profit is so you pay yourself a salary, you pay yourself all these things, and you're funding this lifestyle, you're doing all this stuff, but at the end of the day, we're building a profit to secure something in the future, right?
Okay.
To have money that you can use to invest, to
Like
build,
funds.
to secure your financial, there's all kinds of, to grow your business.
Okay.
It's profit. You use it where you think its utility is going to make the most sense, right? Now, I know some of you don't have the participant guide in front of you, but we're just going to go ahead and skip along to which scenario here makes more sense, right? And what's more sound. So on the left side, she sold a house for $9,000, paid to the order of Jessica Campbell after her split with her office ends up $5,760. That then goes into her bank account. From her bank account goes straight to her wallet. No business savings were taken out. No tax savings were taken out. Now on the right side, sold a house, commission was $9,000. She got $5,760. Right. She took $1,728, put that in her business bank account, took $4,032, put it in her personal bank account. From her personal bank account, she put $1,600 aside for tax savings, right? Put $2,400 in her pocket for her wallet to enjoy. And from there, they put $996 from the tax savings for federal, and then $617 for self-employed. This is just a scenario. But if you look at the visual here, how many agents do you think are operating on the right side versus the left side? Not many, right? You want to be on that right side of the spectrum here. You want to consider that because you get a $9,000 check does not mean you get $9,000 dumped into your pocket. You got to consider these other things. You're running a business, right? You're running a business. The problem with real estate is we are realtors. We are not business owners in our minds. And until we can shift that as realtors, we are business owners first. The left side will continue to happen for many, many people. But if you start operating like a business, is where you can start to take things that are duplicatable, that are systematic. You get high accountability. You could start to put these structures in place and start to see why you do need to make more money. Because all the money you make, as nice as those checks look, it's not all your money. Right? Cool. Now, financially sound business example. You get one transaction, $9,000 commission, $5,760 net payment check, and then $214 in your pocket. Expenses and taxes are accounted for. This is just a simplified way of looking at things. Okay. Put the money aside, open up that business account, open up the personal account. When the checks come in, disperse accordingly. We're going to cover certain percentages and how to go about that. So this is what we're aiming for in this class. It's for you to understand and embrace the smart models that grow your business, pays your taxes, and funds your life. I, in the beginning of my business, personally did not know better. It was fine. I paid my taxes, but it was a shock at the end of the year. It's like, what? I haven't ever paid taxes like this before, right? And you realize what pre-tax really looks like. And it's a big deal. So make sure you guys are, you know, keeping track of that kind of thing. All right, now we're gonna go into some of the fun stuff, the MREA models, okay? The MREA has this model called the economic model. If you guys don't know it, this is what it is. And the economic model is pretty much, it comes from studies of best practices of hundreds of top agents. And the percentages are important because they help you evaluate the health of your business. The idea is to drive a 40%, and I'm gonna repeat that, 40% to the bottom line, a huge margin compared to other businesses, okay? And here's an example of a $10,000 commission check to help you visualize the economic model at work. And the details are broken down in this model, also on page 157 of the MREA. So what do you think of this model? Does 40% of your income feel like a reasonable percentage to have left for profit?
I would say so, and depending on, you know, your lifestyle, you could probably even up that percentage. But I believe it looks pretty darn fair.
Okay, and why?
Well, because you're basically looking at a balance sheet here, and you're covering your cost of sales and operating expenses, and then your profit. And your profit is actually going to break down even further into, like you just showed, your tax withholding. So
Yep.
40% seems like a good chunk of money for profit.
Yep.
I don't know if I'm saying that right.
Yeah,
but
you are.
looks
I
right.
get it. No, you're good. I want to give you guys this. Some of you that are active real estate agents, what kind of cap rates, what kind of ROIs are people looking for right now when they're buying real estate? What do you think, Chet?
You mean when they're purchasing?
Mm-hmm.
I guess it depends on the market.
Yeah.
Yeah, there's yeah, I mean, it really depends. I mean, I can tell from my buyers, like, you know, the buyers that I have in Corona, for example, in Riverside County, there's a little resistance to the market right now.
Mm-hmm.
So things aren't necessarily selling overvalued like they were before.
Right.
Compared to Orange County, where, you know, I had a buyer in Huntington Beach that, you know, they're outbid by $100,000.
Yep.
You know, it's obviously everyone wants a deal. That's for sure.
Yep.
They're hoping for equity down the line based on the current market conditions.
Sure. No, you're spot on. And like, I've worked with investors that want like an 8% return. I've worked, and then I look at LoopNet and I look at the MLS, I look at these income properties and these commercial properties, and some are at a 2% cap rate, 4% cap rate. This is supposed to be the return, guys. So when you compare what that looks like towards a business at 40%, it's a big deal. That's a big number, right? So you got people, you know, who are out there trying to invest in real estate to make 5 to 8%. I don't even know anybody who's making 8 right now, unless you're leaving the state. And then you got businesses at 40. And the only time you get 1,000% ROI on anything is when you have the right people leverage. Human beings are the ones that are the best, that will give you the best ROI. Granted, there's a path with clarity and some models and systems to help them get there. But right now we're just talking about profitability, right? And I think 40% is pretty legit. So I just wanted to give you guys that perspective as business owners. We help people find real estate where people are dumping hundreds of thousands, if not millions of dollars into real estate to make a 8%, 6% return, if not less sometimes. while we're operating a business where we can make 40. Okay, so I just want to give you guys that perspective. All right. Now, the key here is to lead with revenue, not expenses. So when you start out in real estate, you may need to spend a little bit of money to get started, but the key to be financially sound, to have a financially sound business, is to only spend money that has been generated by your business. Okay, it shouldn't cost much to generate a buyer or seller lead if you're working your database every day. Our goal is to Ignite is to help you realize that keeping your costs low and working your database can generate a tremendous amount of your business with very little money. So this is also, again, goes back to like, where's your best time served? Where's your energy best served when you're building your business? And your database, hands down, is the best place for you guys to start. And it's the best place for you guys to continue. And it will be the best place when you guys are finishing, because when you're ready to sell that database, you can actually sell it at 5-10x the return it gives you. Doctors' offices do this all the time. Doctors don't just, all of a sudden shut down their practices when they leave. They bring in other doctors. Those doctors either invest or participate in the level of business that's been generated over 10, 15, 20 years, because they got a database of that community. They've got generations that come through those doors, and parents who now, you've got kids who grow up, get married, have kids, then their kids come in, and so on and so on. And next thing you know, whoever started that practice gets a residual based on that, based on that database, or they sell it 10 times its annual revenue, right? So there's a lot that goes into why running a database is such a big deal, and how effective it is, and is very effective in driving your profit margins. Cool. So here you can see where you got a $10,000. So here's the percentages. You got 100% GCI, gross commission income. Then you've got your cost to sell, which is 30%, which means, if you got a buyer agent or selling agent, listing agent, sorry. And then your other expense, the other big pillar in there, is your operating expenses, your phone, your insurance, your car, all these other things. And then at the bottom, you got your net income profit. So if you play this right, a $10,000 commission check that comes in will cost you $3,000 of cost to sell, $3,000 operating expenses, with a $4,000 profit margin.
So Eddie, in that profit margin, that's where you could take and put in place what you want to say for the future.
Yeah, I think that the best thing to do is keep your profits in place. And then either you could structure yourself with your profit in quarterly distributions to yourself, or you could do it in, every 6 months, once a year, whatever you think is going to work best for you. But it's not until you start building a profit-driven business that you're going to have options.
Okay, so just leave it.
Yes.
Like 1,000, just leave it in place right there.
You leave it, you let it build, because you're going to probably want to expand. Maybe you're going to want to make a hire. Maybe you want to go on vacation. Maybe you want to, buy that house, right? Okay. So you don't, and I'm not saying you deplete, that's why you put money in the business account, and then you put money in your account. And those are growing the business. That's you funding your lifestyle month in and month out. But your profit is what gives you options. How else do you think people will go out and find ways to buy more investment properties? How else do you think people are going out and upping their game when it comes to their business? They can use profit for essentially that they want. I personally believe you should take your profits and do something for yourself with it.
Okay.
That's my personal belief. If you've got your operating process down, your business should be well funded, your personal life should be well funded, and your profit essentially becomes that nest egg that just continues to grow, where you're at a pace where you're not sitting here, and I'm not saying, oh, you got $100,000 in profit, go deplete it at once. I'm just saying you can draw from it to expand your quality of life, right?
Okay.
Eddie, I had a quick question.
Yeah.
Kind of based on this model right over here, and I know it's kind of a loaded question, probably isn't an easy answer, but let's just say that, based on this model over here, you're at, 40%, you're taking away for a net income profit. Supposing you were to hire like let's just say an assistant or an ISA or something like that, would this model work, or would you inherently have to decrease your net income profit? And with that being said, do that consistently for like a 6-month span in order to have that, reserve.
Yeah. So these percentages are goals for you to thrive for, right? And when you're gonna make a shift in your business, one, the reason why you take some and you fund your business account is because you do got to put some away for the business, right? Not just for you. So when you do that and you have enough of a nest egg to essentially make that next hire, or you have that 3 months, that 90-day or 6 month or 1 year salary saved, then you essentially don't have to, because you're leading with revenue, take from your profits. And sometimes you're expanding, and your profits might start dipping down 30%, with the premise that extra 10% being reinvested is going to pay you back a 10 times or a 3 times ROI on the business, meaning for every dollar you spend, you're going to get 3 back. So if that's the case, and you're well aware and you're watching your numbers, sometimes that happens. Or the best way to go about it is, instead of cutting your profit margins, ramp up on your revenue, get those extra deals in, right? So those are the things that you could see when you're actually tracking and following and having some parameters to go by. But when you don't have that, then essentially you don't really know where you're at, right? So either way you want to go, you want to deplete some of the profits to move forward, fine, do that. Or you could say, you know what, no, I'm gonna just close a couple more deals. Or you could say, you know what, I'm gonna make sure that the reserves we have make sense for us to take this next leap. Those are all things that you should have anyway. The reserves, but sometimes, again, like if you're ramping up towards something and you put a little bit more in reserves versus profit because that's what you're working into, that's fine too. But the point is you're measuring and and you're being purposeful why you're doing it, right? And it's and you're in check and how much and how really where you are in getting there, because you're measuring. So this is all very, very good stuff, guys, in terms of how to think about your business. So think about what that check looks like. And at the end of the day, when that profit's $4,000, I want you guys to think about something. I want you guys to think about, like, when you operate from this space, it's also not healthy to have too much profit. Why? So profit at 40% is key, but it's also key because you got to reinvest into the key things in your business that's going to help you drive that profit margin, right? 40% on $100,000 is a different topic from 40% on $1 million, guys. And to get to $1 million, you're going to spend more on cost of sale. You're going to spend more on operating expenses, and that's okay. Because every time you're spending more, you're getting a 3 times return on every dollar you spend. You're getting 3, right? So you got to think about it that way. Maybe if you're projecting a market shift, fine, boost that 40% to 50, cut down cost, ride out that year, because that you got a year that's coming in that you're going to have to probably weather some certain storms. The point is you're measuring and you're being purposeful in how to maneuver because you got these structures in place. Okay. All right. The flow of money. Now we got now that we have the percentages of the economic model down, is that safe to say? You guys got the percentage 30, 30, 40. Remember that. Let's review the flow of money in a real estate business. So typically you got the income, right? And again, I'm going to ask, what's the goal of your real estate business? To drive a
Profit.
profit-based business, yes. And what the formula is commonly used for to calculate profit of your business is essentially income minus expenses equals profit. While this formula to calculate profit is important, it's not the model we use to set and track our profit goals each month, quarter, or year. Instead, we ask ourselves the following strategic questions. These questions could be found again on page 7 of your participant guide. And we're going to go over this out loud together. It's how much money do I want in my bank account at the end of the year? So these are key questions you guys got to ask yourselves. If you're not writing this stuff down, write it down. How much money do I want in my bank account at the end of the year? It's also in your participant guide. The other question you got to ask yourself is how many homes do I need to sell to achieve my profit goal? How many homes do I need to sell to achieve my profit goals? And if you guys need help with that, your productivity coach, if you're here in Cerritos, I could definitely help you guys set that up. We'll look at your conversion rates. We'll set a goal number up there based on what you want at the end of the year. We'll look at your conversion rates. We'll look at how many appointments, how many listings, all that stuff that you need to go on, and then break it down and find out exactly like where you need to be in terms of production and productivity to get you where you're at. And then how can I minimize my expenses to maximize my net income? How can I minimize my expenses to maximize my net income? Now, are there any questions regarding the flow of money as seen in this model? Nope. All right, let's keep it going. So, we got another little section here. Profit, what's your goal? Expenses, how can I minimize the expenses and maximize the income? And then income, how many homes do I need to sell? So that's where that stuff, that's essentially where that goes. I personally have a different philosophy on this. I'm not going to go into it to skew you guys' mind, but I do. I think that if you take your income, if you guys ever read the book Profit First, here actually, I highly recommend you guys pick up this book. The premise of this book is you pay yourself a profit first, then your expenses, because essentially you'll always find a reason to increase your expenses because you're always going to want to spend money. But if you're eating off a smaller plate, then you're probably going to consume a lot less food, right? So that's kind of the premise behind it in short. But to keep things simple, this is fine, but just consider what it looks like if you took your profit out and you made things work with what you had left.
What's the name of the book?
Profit First.
Oh,
By
Profit.
Mike Michalowicz, I guess. I don't know, botched his name, but anyway. So that's another thing. Income, right? So income in real estate business can really only come from a select number of sources, mainly listing income, sales income, referral income, and if you're doing it, leasing income, right? And essentially, this is the items that go into your business, right? Commission earned from closed transactions. These are typically the categories there. Now, in terms of what goes out of your business, which is your cost of sale, It's important to understand that the cost of being in business with a market center, in our case, those costs are company dollar, your royalties, referral fees owed to the market center, understanding your market center's cap. Okay. And then again, those are all on page 9 if you guys need to look into that. And when you have no transaction, there is no cost to sell. Okay, so know that when you don't have a transaction, there is no cost to sell. And company dollar cap, agents pay is determined by the market center, and it may vary by market center. Royalty is capped at 3,000 at a rate determined by KWRI, and the caps are different in different market centers. Now, different market centers might provide a different value proposition. For instance, I know, Beverly Hills has a much higher cap than we have out here. It's all relative to the areas that we're in. Keep in mind that cost of sales are not only expenses, but you'll have in real estate or in your real estate business, you'll have operating expenses and the expenses you incur to run your business. Okay. So we're going to dig into this a little bit in terms of what your cost of sales are. So let's dig in. Cost of sales by doing a quick exercise. Follow along on page 9 of your participant guide. If you don't have that, just follow along on the screen. And you may want to get out a calculator or a smartphone to complete this activity. So you guys get ready to maybe do a little bit of math, okay? At the top of the page, you'll see 3 formulas. These formulas represent your net commission based on whether you've capped on company dollar, royalty, or both. For this example, we're assuming that you are on a 70-30 split with your market center, meaning 30% of your gross commission income will be paid to the market center in the form of company dollar. So your split to the market center is considered a company dollar. Along with that, 6% is calculated based on the gross commission income if you are not yet capped on your royalty. So that just means you got a $3,000 cap, but you'll pay 6% from each check until that royalty is then paid, and then you get 100% of your money or you cap on your royalty, right? But not your company dollars. So when you're 100% capped, meaning you're both capped on your royalty and you're both capped on your company dollar. And at that point, we're going to cover these 3 formulas. Okay. So here it says, you have not capped on your company dollar royalty. What is a net commission check you will receive on your cost of sale? The formula is GCI minus company dollar. Okay, that's what that little CO $ looks like. So you're going to multiply your GCI by 30%. I'm sorry. Yeah, by 30% minus your royalties, 6%, which is going to give you your net commission. Okay. And then it says you've capped your, let me see here. You've already capped your royalty and you have not yet capped your company dollar. What is the net commission check you'll receive on your cost of sale? The formula for that is your GCI royalty minus 6% equals your net commission. Okay, and then here it says you've capped on both. What is your commission that you receive after the cost? So your GCI times, okay, your GCI, which is the 30%, is paid to the broker, company dollar, up to a maximum of whatever your cap is. Okay, most of the market centers here are $22,000. And then you're going to take your GCI and you're going to multiply that by 6%. And the amount paid to KW royalty is a maximum of $3,000. So let's throw $22,000 in there. Who wants to do some math with me? What's 30% of, let's just throw in $10,000. It's $3,000, right? Paid to the broker and company dollar. So that's $3,000 that gets paid towards your $22,000 cap. So what are you left with?
$7,000.
Right. So you got $7,000. And then you're also gonna minus that by your 6%, right? So the GCI for royalty here is you're gonna take your 10,000, multiply that by 6. Percent. And that's gonna leave you with
6,400.
6,400. So I know that's probably confusing for you guys, but I just want to work it out with you a little bit so you understand what's there. Okay. So are you guys getting so your net commission is essentially your GCI minus your company dollar minus your royalty. So what are you guys getting from that?
Pretty much any time that you're calculating, your income and everything like that, and, your net payout to yourself, obviously calculated out after you've done this calculation.
Yep. And it's cool, right? Your market centers pay for classes like this, resources, a place for you to come in, do your business, bring your clients into, right? They do a lot to get these places going. Since I've been in leadership, I've actually I've got more insight on the brokerage side than I have in a long time, and I'm actually pretty surprised. And sometimes how much those margins are slim just to keep operating big offices like this. It's crazy. That's why you're getting these virtual offices that are bright and shiny and stuff like that, that people are like attracted to. But the reality is they don't have a lot of the facilities. They don't have a lot of the resources. And I'm not saying there's anything wrong with that. I just think that there's a different platform for the different type of agent, depending on what you're up to and what you're creating. And I always say that, and that, price is only relevant in the absence of value. Because if I'm able to, for instance, get a coach, which I do have, a MAPS coach, I pay $1,000 a month for that. But that MAPS coach gets me 3-4 times my ROI, and then guess what? He's worth every penny, right? For every 1,000 I spend, I'm getting 3 or 4. That makes a lot of sense for me, right? So I'm going to keep doing that. And that's kind of the premise. So when you are part of a brokerage, it's super important for you guys to take advantage of the resources. And one thing we definitely focus on here, at least in Keller Williams, is to reinvest whatever resources we can into making sure the agents are finding a level of success. And that's why we know we're also not the cheapest. But the cool thing is you also do get the opportunity to get 100% of your commission, right, after you reach your cap. So a lot that comes in with that. Cool. Build your future. Okay, so now we're gonna get moving along here. We're gonna talk about some models and plot some courses here to help you build your future. Okay, there's an activity here that they want us to do, but the activity is about we're about to complete is to help you determine how you'll achieve your profit goal. We'll be working backwards from profit to determine your activities and your budget. For this activity, we want you to get a calculator out or use an app on your phone, right? And run through some examples and activities together and see where that goes. So let's see what this looks like. All right, so you plan for a future with profit, right? So you've got to, so let's do this. So I know that some of you guys don't have your participant guide, so I want to see how we can do it real quick. Let me see, let me just go through this and let's see if we can get it going just by the visual we have here, okay? So if you do got your participant guide over page 10 of your participant guide, if you want to follow along in the activity, it'll give you the outline of your annual business plan built on your profit goals. So write down your annual net profit goal on the top of a piece of paper. For example, the net cash I want to have in my bank account at the end of the year is $100,000. Okay, let's just put that in there. All right. And then 2, we're going to calculate the gross profit you'll need. Okay. The gross profit goal you'll need to make the account for the tax So the gross profit goal you'll need to make to account for the tax liability on your net profit goal. We recommend anticipating a 40% tax liability. To calculate the gross profit goal, we would divide our net profit goal by 60%. Okay, so we're taking our net profit goal. Okay, we're going to divide our net profit goal. I'm sorry, our goal, divide our net profit goal by 60% to get our gross profit goal, right? So what does that leave us with? That's 60% divided by 100. Okay, gives our gross profit goal. So now we're realizing we're at 166,666. Okay. And then to calculate the gross profit goal, we will divide our net profit. I'm sorry, we did that part already. So to calculate the gross commission income, you need to attain your gross profit goal. The formula to calculate your GCI is to take your gross profit goal and divide that by 40. So 0.40. So you divide your gross profit by 40 to get your gross commission income. Okay. So now we're at 416,000. Bear with me. I know this is easier if you guys had this visual or had your participant guide, but I'm just going through this to get through it. All right. And then it says, let me see here. All right, so we did that, and then the MRA budget model suggests that we stick to an operating expenses we talked about, right? Budget that is equal to 30% or lower of your GCI with an anticipated cost of 30% of GCI, right? So we can expect a 40% profit margin from here, okay? But next up, now we do want to figure out where our home sales are, right? So we're going to divide our GCI by the average commission income, right? For this example, it's $7,500. And that leaves us with 56 transactions, home sales to go by, right? And then as we're moving along from there, okay, we could then see kind of like where we're at, right? So we need to close 56 home sales, right? To target our goals here at a price of 7,500. Okay. And then to anticipate, okay, so, and then as we move along here, sorry, this is pretty extensive right here. So to calculate the number of homes you got to sell to achieve your GCI, the formula for this is to divide your GCI by the average commission income, okay, of sale multiplied by your average commission percentage. Okay. Now, next is you calculate your anticipated cost of sale. All right. And then you calculate your operating budget the MRA budget model recommends that we reserve 30% of our GCI to cover operating expenses. Therefore, our annual operating expense budget would be 312,000 with a GCI of 1,041,66. So let's click on that. All right, so what this is pretty much trying to get us to do, guys, just so I could just like simplify it for you, is we need to start looking at what our net profit is, right? And when we could take what our net profit is, we have other costs, right, that are going to get us to that net profit. So we got to make sure we're accounting for our cost of sale, right? We got to make sure we're accounting for how many home sales we need based on our commission price. And if you don't know what your average commission rate is, I think it's extremely important for you guys to figure that one out. So if you asked your market center MCA and said, hey, or you looked up your own records and said, hey, let me look at what my average commission check looks like, right? So take that number and then ask yourself, based on those, you know, my commission check and the amount of homes I sold, right? Cost of sale, if you have any, right? Or what your operating expenses, to find out how much money you actually have to make, right, to get your $1,000 in net profit. Okay. Now remember, you got that big number in there, right? That gross commission income. That means before your splits, it's 416,000. And then you got your gross profit goal is 166. At 7,500 average commission check, you're getting 56 homes to get a net profit goal. Now remember, this is a net profit goal, right? Your anticipated cost of sales and your operating expenses could be certain things that obviously your cap comes out of that, your royalty comes out of that, all your operating expenses come out of that, right? To leave you with a net profit of 100,000. Maybe you're paying yourself, right? And there's a cost of sale there. So keep those things in mind. And I highly recommend, if you don't have the participant guide in front of you, it'll make it a lot easier, because it's pretty hard to just verbally articulate this for you guys. I mean, there's the visual, but still, right? All right, let's get going here. Best practices. I'm gonna cover some best practices here. Go over a few things. So I've done a lot of talking here. So who can start reading off some of these best practices for me?
Gain clarity on your big life hopes and dreams. Set your personal and business budgets. Set up your business entity. Open additional bank accounts for taxes, expenses, and other savings. Download and use the MREA chart of accounts. Purchase, download tax accounting software. Hire an accountant, CPA, attorney. Set dates to calculate and pay your estimated taxes. Prepare for your future insurance savings investments.
Yes. So, you know, you'll see this short checklist of best practices, and this list is not like, you know, by any means, you know, gonna put yourself to a path of like, you know, complete financial well-being, but it will ensure that you get some of the key things, right? Obviously, you got to generate business, you got to close business, but you know, this is just a quick checklist of some basics that you guys have available to you that you could start to do now. So it will get you on a path of financial well-being, but it's also going to be, you know, going to take a lot more to to make sure that you incorporate the habits, you build the habits to practice, you know, some of the stuff that we talked about in these previous slides constantly, so that you're like living it, you're seeing it, you're breathing it. And when you're doing that, you're going to start to see how much more you got to put in, or how, or where to make your adjustments, right? And there's no better way of knowing what's in there. Just like when you're prospecting or you're making calls, you got a better feel of the market than the people that aren't, because you're talking to more people every day, right? You're hearing what they're saying, you're hearing their beliefs, you're hearing their interpretation of what the news says. You're hearing people being excited or feeling like they have a sense of urgency, or not having a sense of urgency anymore, or whatever it is. You know, it's the same thing. The more you have a relationship with it, the more you can get yourself going. Okay. So go through the list briefly, talk about the input, you know, go through the, you know, list briefly for yourselves. Again, you guys, participant guide, I think this one was really important. If you guys don't have it, I'm going to post it at the end of this to make sure you guys do, to actually take a look at this stuff. You know, all these things are huge, right? Set your personal budgets. And then for your CPAs, I did this. You could download the MREA chart of accounts. If you do that and you're filing your taxes, let your CPA know, hey, like, this is what my business wants. You know, these are the parameters I'm supposed to be running in my business. When you break down my numbers, like, I want to use these chart of accounts. I want to make sure that certain funds are distributed under, you know, these categories, so I know where I am on my percentages. So have that conversation with them. It's super, super important. And that's essentially it, guys. I mean, I know the math kind of pulls people out a little bit, but that being said, what did you guys get out of today's class?
And it was really some great information for me. Now that, you know, I'm listening to what you have to say, and I took a lot of notes. I just got to catch up with my math, but I want to put a lot of this in place now, since I'm starting off fresh.
Sure.
So I want to put a lot of this in place, you know, to get my business flowing like it's supposed to be.
Cool. Awesome. What else? Who else can share some ahas with me real quick?
Well, definitely.
I can. Oh, go ahead.
Oh, I was just gonna say that it definitely put everything in line as far as future planning and expanding. You know, gave a realistic breakdown of if I want to kind of expand out, or if I want to create a team somewhere down the line. You know, this is kind of given a foundation to how I'm going to achieve that by breaking down, you know, how to expense, how to, you know, what's important to take out, how to kind of future plan.
Yep, absolutely. Especially if you want to build a team, it's so important to have these numbers in line and to know your conversion rates, and to just have the have those parameters to abide by. Because if all of a sudden your cost of sales is at like 40 and your operating cost is at 50 and you're on a 10% profit margin, right? You gotta see, you know, that stuff starts to show up. So you gotta look, you know, where am I in that process? It's a big deal. I want to share the participant guide with you guys because I want you to download it. I think today's class had a lot of math, and I don't know how you guys received it, not having, if you didn't have the participant guide in front of you. So I don't want you to leave without having it. So let me just put it in the chat real quick so you guys can download it.
For those that are on the Spring Street Facebook page, Nick under files uploads them. So if anybody from the Long Beach office, I'm not sure about La Mirada, but on the Spring Street Facebook page, Nick uploads the files, the participant guides.
Yep, we have, exactly. He's also doing that in our town center page for Cerritos as well. I'm pretty sure La Mirada and their Firestone page probably has it. So whenever Nick posts about Ignite coming up the next day, he does it a day before, he usually puts the participant guides in there as well. What else? Let me see here. Where did it go? Okay, here he is. Financial basics. Perfect. All right, there you guys go. It's in the chat. You guys have it. Also, because you guys showed up today, I'm going to give you guys something that I do for my clients in coaching. I want to give this to you guys. It's called the LID. It's Lifestyle Income and Debt. I think this is a super, super cool tool. I got the idea from Gene Rivers when he came to do Quantum Leap, and it's an Excel spreadsheet, and I'm going to open that up. I just put it in the chat for you guys to have as well. But I'm going to go ahead and share screen one more time and just give you guys a brief overview of what that looks like. And I hope this will help you guys out. Let's see. All right, do you guys see the Excel sheet here? It says lifestyle income debt. All right, so I created this Excel sheet. Pretty much it's your projected monthly income. It's also your current actual monthly income. And the premise here is we want to know what your current is. And then we put in a projected cost or a future here because we want to know, what are you living into, right? What do you plan on having? Right? Do you want to pay off your parents' home? Do you want to have that next, that next house to move into, or that forever home to go into next? Right? Do you want to update or upgrade your car? Like, what do what's there in your future that's going to get you excited? And we're going to identify the gap, and that's the number that we're going to use to essentially start putting into your GPS or your business plan. But these items here on the side are just, the basic things that you would consider for maybe housing, transportation. Again, all these are detailed because we want to expand your mind. Maybe you want life insurance. Maybe you want budget for health insurance, right? Maybe you got some home insurance, food, groceries, dining out. Maybe you want to have $1,000 budget a month to go eat out. Why not? Maybe it's Mastro's every day for you. I don't know. Like, what does that look like? You know what I mean? Pets. Do you want a horse? Do you got some toys? Do you got some dirt bikes? What do you want? So we're creating this because you might already have some of these, or maybe you want to aspire to get them, right? So, and we want to get there, right? Then you got personal care here, right? Do you want to, are you somebody that likes to shave at home, or do you want to go to your barber, twice a week and have him do it? I don't know. All these things, right? Like, are you part of any health clubs, organizations, subscriptions? Are there anything there that you want to take care of? Entertainment. Do you want to go to sporting events? Do you want to buy, box seats to Laker games? Do you want to, or just have, just the regular old seats? Whatever that is for you, want to just start expanding your mind and maybe why you want to make more money, right? Personal loans, right? Taxes. Are you putting enough aside for that? Where are you at? Maybe you could start to project from making $100,000-$200,000 a year to 500. What can you start to project your state and federal is going to look like, right? Savings, right? Are you saving? Do you have a retirement account, IRAs, anything like that? Is there a cause, a charity that you want to contribute to? Do you want to be the biggest donor in your church? I don't know, like whatever that is, right? Legal stuff, all of it's there. And the reason why they're itemized like that is because to get you to think, right? Like maybe some of these things aren't, in your foresight, you're not really thinking about it. So it's there to just expand your mind. And then on the right side, you got your business, and these percentages in here are all broken down based on the MREA. The 12%, the little 9%, the 1%. These are little MREA chart of accounts. I put other dining out, travel, little things that we get to write off in real estate and stuff like that. And then these are just some buyer specialist, seller specialist percentages. So you can also reference some of these things in the MREA book. But typically what I do is I take this Excel sheet here, and I have you guys fill it out, or my PC clients. And then once we identify their number and their gap, and we know what their total income is to live into this future that they want to build, that's the number I use when we make their GPS for their financial goal for the year. So I'm sharing this with you guys because I want to see you guys do well. Obviously, we covered financials today, and I just think that this is just maybe another tool that can help you. So if you can, it's in the chat. Go ahead, download it. It's yours. Utilize it. If you have any questions, feel free to, contact me. I'll be more than happy to help you. Cool. With that said, is there anything else I can answer for you guys today before we move along?
You say you put it in the chat. I don't see it in the chat.
You guys don't see it?
No, I got it. I've already downloaded both of them.
I don't have it.
Are you on your phone or your computer?
I'm on the phone.
That's probably
That may be
why.
why.
Yep. We'll talk about it. I'll send it to you, Kay. No worries.
Okay.
Okay.
It's you send it to my email. Do you have it?
Can you text me your email when you get a chance?
Yes,
Okay,
I will.
great. Cool. All right. If that's it, guys, that's a wrap for today. This is our last time. We'll be at Ignite until it comes back around. So tomorrow's your last day. I believe Rob or Richard or Adam or somebody on Murad will be covering it. But I do want to thank you guys for participating and choosing to take your business seriously and joining these, joining Ignite and plug in. My best advice to everybody here is plug into the trainings, plug into the classes, just immerse yourself with everything the market centers have to offer you, because every time I did that, I just found myself growing little by little, and eventually, amazing things will happen, and you'll start to see and get to reap the rewards of the culture and the environment and the things that you guys have available to you, right? The value is always in the utility. So if you're using it, I think you'll get a lot out of it. So kudos to you guys for being on here. Best of luck to your businesses. I'm always here in Cerritos. If you guys ever want to reach out to me, feel free to do so. And we'll catch you guys on the next Ignite or the next training.
Thank you, Nick. I really enjoyed the Ignite. It's helping me. So I'm glad that I was able to attend.
Awesome. Thanks, Kay.
It's going to put
Thank
me in
you.
a better position to follow these steps.
Sure. Absolutely. Just stick with it and you'll be just fine.
Yeah. I see you're fine. You stuck with it and look where you at. So I can learn from you and like you.
Yep. It's a constant work, right? Like even some of the math here, I don't do as much, right, as in daily, but it's also not there for you to like really do every single day, but it's there for you to understand, so you could do specific things every day, right? So you could just like when you need to calibrate, when you need to measure, you have those tools. So just stick with it and build some key habits. I would say is the biggest takeaway from this. Build the habit of looking at your financials constantly. Build the habit of knowing where you are in your lead gen and your lead gen numbers consistently. Do those two things in this business. You can start to drive yourself in the right direction. And think big. Think big.
Yes.
Sure. Cool. All right, guys. Have a good one.
All right.
See
You
ya.
too.
Thank you.
Thank you.